I think Gui brought up a couple of important points. Perhaps I can ask Dr. Lim as well as Pei Chi to elaborate on the way in which they calculated the inflation, the inflation impact, and that would, I think, answer Kwan Min's question on, when you say GST of 1% increase, 0.5% increase in inflation, whether that takes into account the decrease or the abolishment of the sales and service tax. Just to also clarify, Singapore introduced GST in 1994. That time I was finishing up my A-levels in Singapore. It was 3%, then it increased to 4%, and then in 2004, 2003, 5% in 2004, and then in 7% in 2007. I think that's a regular strategy for many countries wanting to increase and broaden the tax, wanting to broaden the tax base as well as to increase more revenue. Japan is going through that now. Perhaps also Azrul can talk about what Hingui was talking about in terms of capital flight to other countries. If let's say we introduce a capital gains tax, and then the other panelists can feel free to elaborate on the other points mentioned.
Okay, thank you. First thing I want to clarify to the gentleman's question is that, okay, Penang Institute is not endorsing 25% GST rate on transport. First, I want to make it clear, we are not endorsing it. We are trying to show that if we want to address the issue of regressiveness of the tax, i.e. the poor being hit more, even if you put 25% on tax on transport, even if you do that, you still cannot solve this problem, which is that the poor is getting hit more. So I'm not endorsing it, I'm trying to illustrate a point, which is that the nature of this tax is such that it's so strongly against the lower income groups. So that's the first point. In terms of the capital gains, I think there's an element that we need to consider, which is that, yes, like what Mr. Lee has said, capital might not come in. An additional issue is that the dominant role of GLICs in the stock market in Malaysia. And GLICs, meaning the EPF, the government-linked investment companies. Government-linked investment companies have a dominant role in the stock market in Malaysia. So are they going to be exempted from any capital gains tax? That's the first thing. If they are, then of course there won't be any impact. If they aren't, then it is the normal retailers who are retail investors who will be paying the capital gains tax. So the stock market in Malaysia is already suffering from a very dominant GLIC's role. So if you force these retail investors out, then the stock market in Malaysia would just become a playground for EPF and PNB. So what about the pricing of the stocks in the market? Is it going to be accurate? Because EPF is going to tell PNB, I'm going to buy this. PNB is going to tell EPF, I'm going to sell this. So that's an issue, a larger issue that we need to think about it. And in terms of our calculation of the CPI, we use the CPI basket. The Department of Statistics tell us that, okay, for 100 ringgit, this typical household is going to spend X amount on food, X amount, or Y amount on transport. So if we think that transport is going to increase by 6-point-something% because public transport is exempt, so if it increases by 6-point-something%, then what's going to be the impact of that? So if it grows from 20 to plus 6%, what would that be? And we sum it up, and that's going to be the expected increase in your CPI. And whether the households are going to be footing the bill because companies have to suffer the GST, and hence they pass on the increased cost to the consumers, that very much depends on the economic situation of the industry. Does the company have a monopolistic position, i.e., if it raises prices, people will still have to buy their goods and services? Is it that? Or are there lots of competitions in the market? If you increase the price, I'll just go to another provider. Is that the case in Malaysia? So that's something that is not so clear. Peggy, you have any more to add to it?
I'll clarify Guan Ming's question about the 1% increase in GST leading to 0.5% inflation. So as Kim-Hwa explained just now, we assumed some of the goods to be 0% based on whatever the customs department publish and tells us. Essential goods are basically 0%, and the rest of the goods will be 7%. So calculating that, let's say 0% on health, so 0% on, so the effective GST on health is 0, whereas for food, some of them are exempted, some of them are not. So the GST rate on food is 1.6%, I think. Yeah, so 1.6%. So you sum up all these categories and you get a certain GST rate, a certain inflation rate. And from this, our assumption was that SST was not removed. It's still within the system, and that will lead to the 1% GST leading to 0.5% inflation.
I have a few arguments in defense of my proposal. Number one, from the perspective of having a fairer sharing of the burden of the adjustment, if you are heavy traders in the stock market, for example, I'm sure you are rich, and another thing is the stock market in Malaysia is dominated by state funds like Khazanah, EPF, and things like that. So I think it's about time that they should also share the burden of adjustment, because we have seen in order to address the issue of budget deficits and also rising public debt, the government has been reducing subsidies and all that. And I think it's about time that we think out of the box and think of other ways to diversify revenue. And I don't see any reason why we should not consider that as one of the options to diversify the revenue base. And besides, we have seen developed countries like the US or the UK, their financial centers remain among the biggest and the most dominant financial centers in the world, and they have capital gains tax. It doesn't prevent these countries from having financial centers in the tier 1 financial centers in the world. So I don't see any reason why shouldn't we consider that as an option.
Chi-Chang, maybe can I ask you to address the issue of what Hing Gui talked about? One argument that some people have made is that once you have a GST, because as companies you would need to produce receipts to claim on the input tax, that this may be a way in which you can make sure that companies who previously under-declared their profits and whatnot are brought into the light, so to speak, and we are able to raise more revenue from them.
Okay, I think as I said, the problem with us in Malaysia is that we don't have a strong compliance culture. And as Professor Wu was saying, in China they had an they had a fake receipt market, which China resolved by shooting people. I don't think we're ever going to have that type of drastic punishment in Malaysia. So I think ultimately policing is going to be very difficult, and you're going to still have a fair amount of leakages from the system. If it's a replacement tax, then the government is lying to us, because then it shouldn't be raising any additional revenue, and it will not close the fiscal deficit. So you can't have your argument both ways. That's the main point I want to raise, and then I hand it over now to Professor Wu.
Could I suggest a compromise? What is a replacement tax? Think of it this way. The government has its hand in your right pocket. Now it removes its hand from your right pocket and put it in your left pocket. In that sense, it's a replacement tax. The question is it taking out from your left pocket now more money than what you used to take out from the other pocket? The answer is yes. In other words, it is not revenue neutral. In other words, yes, the government did reduce one tax and replace it with another. The idea of you remove the hand from your left pocket and now put the hand in your right pocket. But this time, it takes more from your right pocket than it used to take from the left pocket. I agree with you that the GST is needed, but only if the government does the two of the following things. If it does not do any two of the following things, then the GST is a bad idea. Number one, it has to improve expenditure efficiency. That without improving expenditure efficiency, there are no countries in the world that would ever introduce a new tax without doing something on expenditure, because otherwise the situation is too dangerous. You just take and spend and spend. Number two, we have got high profits of state-affiliated enterprises that are using the retained profits to expand themselves, to drive out the private sector, and basically driving them out of the country. That is undesirable. And I think, yes, I agree with GST, only if the government does something on these two fronts. I support our ASRU's recommendation for a capital gain tax, because I also support a capital gains tax on sales of homes if an exemption for the first time. The first time you make a profit on reselling a house, you can keep that gain. Presumably, you're plowing it to buy a better home. But if you are flipping over many homes, then the capital gains should be taxed as well. And in this case, after all, the housing bubble is a real phenomenon. This particular measure would control the bubble as well as bringing in additional revenue.
Yeah, I think probably the RPGT, or the real property gains tax, will be increased in the upcoming budget, probably in line with what Prof. Wu said. Okay, I think we've had a very invigorating discussion, about 45 minutes. I'd just like to end here so that if, let's say, you have any personal questions in terms of the specific presentation materials that you want to ask Dr. Lim, you can do so now. But before we go, a couple of things. One is that if you haven't redeemed your parking coupon, you can go outside to go and get a flat rate of 10 ringgit for your parking here. The other announcement I want to make is also that if you want to get a copy of Dr. Lim's presentation with his permission, you can leave your email address outside, and then after this we will email the presentation to you, so that if you've missed out any statistics, you can get it from him. And also go to the website, Penang Institute /GST. You'll be able to get the figures and hopefully the paper from there as well. So without any other announcements, I'd like to thank the panelists as well as the main presenter, Dr. Lim, for his efforts. Thank you very much for coming. We look forward to other events hosted by Penang Institute in Kuala Lumpur in the future. Thank you very much.